Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Friday. In today's program, I want to discuss what has happened today in the market and ask a very important question, which we've discussed in the past several videos over this week and over last week. And will you answer that question? Is this the end of a bear market rally? But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get started. So what has happened today? Well, we've had a market crash in many ways. In many ways. Those of you who joined me this morning when it started, actually started late last night in the US session, it carried on for the European session. We know the reasons why. You know, it's because the fact that, as we said in the past, and this week we've talked about it several times, will the market wake up to reality that the Fed will carry on being aggressive? And we also spoke last week about this. We said the market shouldn't challenge the Fed. And obviously this crash has been spurred on to the fact that several Fed members said yesterday they are committed to getting inflation down to 2%. So in other words, the market is now coming to the reality that the Fed will carry on raising interest rates for the remainder of this year. So that leads me to another question. Is this the beginning? Are we seeing the beginning of the end of a bear market rally? Now, don't forget, I think it was Tuesday, we did another video and we discussed this. We talked about it, what a bear market rally is. And basically, a bear market rally is suddenly a rally on the upside when you're in a bear market, as in if the market's been going down a downward trajectory. But for a little period of time, the market bounces up and bounces back. It's called a bear market rally before then obviously continuing downwards again. Now, the interesting study, there was an interesting study done, okay, that basically looked at bear market rallies since 1929. And over this period of time, since 1929, most bear market rallies went up to 17.2% from the lows it was, and lasted 39 days on average before collapsing again. Interesting statistic. Now, the S&P 500 has recovered since hitting the lows of June by 17.4%, and this has been over the last 41 days. So, pretty similar to that statistic. Now, obviously, statistics can will tell you anything you want to look for, but it is quite interesting, this study. Bear in mind, they studied the bear market rallies since 1929. So, like I say, is this potentially the beginning of the end to a bear market rally? Now, what we also have, basically, is a rush towards safe havens. Safe havens, pushing the US dollar to the biggest weekly rise since April 2020. 2020. And really, we've got pure risk-off sentiment gripping the market. Pure risk-off. And we can see this because we've had a collapse in risky assets like Bitcoin, which has crashed to a 3-week low. It's actually down by 8%. 8%. Let's have a quick look at the market as it stands at the moment, including Bitcoin, see where we are with it. Now, as you can see, this is on a daily chart. This is Bitcoin. It's currently trading now at $21,395. Before this initial shock to the system, it was trading around about around about 23,000. So it is a big drop. There is a key area of interest, which I'm keeping an eye on for Bitcoin, which is 20,929. But like I say, risk-off attitude and obviously riskier assets like Bitcoin do suffer. Let's have a quick look at something else as well, because there's a lot of pressure on so many majors today because of the US dollar's strength. The euro, let's look at the euro. The euro is currently trading at 1.0049. 1.0049. 1.48 now, actually. Okay, it's broke through or testing a key area of 1.0071. Next key area of interest, if it carries on this momentum, is 1.00027. Okay, this is now given the euro bears more motivation to push the euro down to parity. And I'll talk more about that in a minute. The cable, the British pound US dollar, my lord, it's had a really tough day as well. Okay, currently trading at the moment 1.118 now, and it's actually testing. This is a key area of interest as well. It's testing that area right now. So it's keeping a close eye on that. The cable under horrendous pressure with dollar strength. Dollar yen back up to 136.97. Okay, the next key area to look for, if it carries on this bullish run, will be 137.90. So it is a lot of dollar strength. In fact, we can't, we looked at any currency pair, we can see dollar strength. Aussie dollar under pressure against the dollar. Kiwi dollar under pressure against the dollar. Okay, gold, my beloved gold, under pressure because of dollar strength. Like I say, it's currently trading at $1,751. We look at the S&P now as well. Like I say, S&P. Okay, don't forget we spoke about this the other day, and we said around about 3 days ago when it touched the $200 moving, 200 simple moving average on a daily. Is this the peak? Is this the beginning, the end for the bear run, bear market rally? Sorry. And it says it's currently trading now at 4,240 points. And it sets, if it carries on this way, it's going to end the fourth weekly gains. Over 4 weeks, it's just nothing but gains. So it ends that winning streak. So yes, a real tough day for the market. In fact, this could be the worst week for the market in 3 weeks. If we look at the NASDAQ as well, okay, again, under pressure, 13,295 points. So yes, it is a bad day for the market, but a really good day for the US dollar and for the greenback. But there's something else. I mean, let's ask a question. Is all this pure dollar strength? Pure dollar strength? Yes, some of it is. But I think there's something different as well, especially for the cable, the British pound, and especially for the euro. Because I believe reality is beginning to kick in on these pairs as well. For one, let's start off with the euro. Winter is coming to Europe. And we all know they face a severe energy crisis. Okay. We will start seeing this come October, November, when it starts getting cold. Now, here's the thing. They are running out of supplies. They're trying to build up their supplies. But here's the thing. They're not going to be able to do it. They're not going to be able to reach those supplies they need to carry on winter as normal. So are they going to experience a new type of lockdown? Which is on the cards. Because if they're going to have to ration gas and energy, then people are going to have to start working from home again to save on the expense of offices and other places using up the precious gas. So are they going to experience a brand new type of lockdown again? UK, this is why the cable is under horrendous pressure as well. Not just because of dollar strength, but because of several other issues. Reality is kicking in for the UK as well. There's a chances we're going to face recession. I'm British, but I'm not in Britain. Chances the UK can face and actually reach a recession by quarter four, and inflation could be up to 13.3% by October. Don't forget the inflation reading this week was released at 10.1%. 10.1%. No, so the reality of how bad off Europe is and the UK is also taking its hold, and this is why we've seen dollar strength against those pairs, as well as obviously the rush of the market into safe havens. And it's interesting enough, there was an analyst by the name of Jane Foley, very highly regarded. She specializes in currencies for Rabobank. She says, or she believes, the euro dollar again could potentially fall to 0.95. 95. Don't forget, I've been one. I do expect it at some point in the medium term for the euro to go under parity again, because I think the energy crisis in Europe and economic data coming out of Europe is shocking. So I do expect it to go into parity again. So whether it gets to 0.95, again, that's her opinion. And she also believes, or she also thinks, the British pound, US dollar could fall all the way down to 1.14 against the dollar, 1.14. So extremely bearish views on the euro and the sterling. Up next week is the big one, the Jackson Hole Symposium. This is the yearly annual meeting of the Fed, sort of Fed Forum. And Jay Powell will be speaking. And the market is going to be holding their breath to see if he's going to be hawkish in this speech or dovish. And a lot of expectations is he's going to pull the rug even further out of under people's feet with any of those people who think that they're going to be light on interest rates. So yeah, that's a big one. But we're going to talk more about that next week. But what a week this week has been. Absolutely exhausted, but as I always say, and excited at the same time. So what we had, first of all, starting off, we had UK job data, which came in, not bad, but not good. Not bad at all. Claimant count was a disappointment, but unemployment was the same. It stayed at 3.8%. So that was good. Then we had the greenback starting to fight back. Remember, we had a lot of greenback weakness yesterday, last week, on the back of that better than or lower than expected CPI reading. But we started to fight back last Friday and it continued to fight back. That's why we started asking the questions, is the market beginning to wake up to reality? Then UK CPI came in and it was a shocker. It was released at 10.1% versus the expectation of 9.8%. A shocker. Then we had Elon Musk again using Twitter to have some fun. And he put out on Twitter saying he was going to buy Manchester United. In his own words, going to buy Manchester United, you're welcome. Which, of course, gave a lot of excitement to a lot of Man United fans. I'm a Man United fan myself. And actually, the Man United share price went up. This was a joke, however. He was totally joking. And he did say shortly afterwards it was a joke. But still, things went about, rumors went around about obviously Man United being bought. And then the Glazer family, who does actually own Man United, they announced on the same day that they are willing to sell a minority stake in Man United. So that was one of the stories and one of the dramas. But yes, Twitter. Yes, he loves Twitter, doesn't he? Anyway, then, of course, we had the FOMC minutes, which came out fairly mixed, fairly dovish in some parts, but it was hawkish in a lot of parts as well, which the market initially missed. Then we had US jobless claims came in a lot better than anticipated. Actually was announced at 250,000 versus 256,000 expected, so better than expected. Then obviously we had the Feds speaking last night, reminding everybody how hawkish they can be and how committed they are to 2% target. And guess what's happened? We've had dollar strength across the board and the stock market under horrendous pressure, having this, like I say, they're probably set to have the worst week in 3 weeks. So there we go. What a week. What a week. But guess what? We've got another week to come. Yes, we have. Next week, chock-a-block with data. We have Germany manufacturing PMI, EU manufacturing PMI, UK services PMI, US durable goods, US GDP. Let's see if it's still negative. And the Jackson Hole Symposium, which I think is going to be probably the big one. It's going to be that event. It's going to be a big event. So please come and join me next week for many of these events, because I think there's going to be a lot of activity in the market throughout the week. Market as it currently stands, FTSE negative 0.02%, DAX currently trading negative 0.47%, and Eurostoxx currently trading negative 0.91%. Like I said, not a good day for the market at all. Don't forget, you can obviously speak to me or ask me questions anytime you wish, or just simply say hello if you like. Or, like I say, have an open conversation. Do you think this is the end of the bear market rally? Or do you think there is still more of there's still some balls out there to push it higher? Is this the end of a bear market rally? Are we going to see a turnaround? Like I say, like I said, I think many people are saying this could potentially be the end. We're going to have to obviously have dip buyers throughout, because you do get those. So like I say, with indications, I think the reality of so many things is beginning to sink in to so many people's, so many market, that's a mind of the market in a big way. So yeah, but like I say, if you disagree with me, or share with me, let me know what you think. Is this the end, or are we going to see, this is just a false, fall? I mean, the dollar, for example, dollar strength against the euro. If we have a look at it again, where it is now, I mean, it's 1.00445, 1.00445. Okay. So yeah, like I say, do you think it's going to go to parity again? Let me know. You're Sterling still testing that key level, but it's pressurizing it. So yeah, but like I say, or you can just simply say hello. It's entirely up to you. Not a problem. Not a problem. Don't forget, if you think of a question later, you can put it in the comment section on either Facebook or YouTube, and I will see them, and I will reply to them next time I'm online. Talking of which, I'll be back on again on Monday at 8 a.m. UTC. Let's see how the US session has treated the dollar. Is it kept, the dollar still king, etc., and how the market is closed how the market closes today, and how the market's opening on Monday. So I'll be there at 8 a.m. UTC, and back on again. At 2 p.m. UTC to talk about the US session. So please come and join me for that. As I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it interesting, and you've put up with me, my over-the-top enthusiasm for the market, which I simply just cannot help because I love the markets, then give me one of these. It's nice to know that you like what I do. So I've got a like already, which I really appreciate. But anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.